is that we had a very extensive haven rally a week ago on Monday when the yen carry trade was being carried out to some extent. And that's why yields fell so quickly and so sharply. And you're now having to come back and sort of find an equilibrium. And it seems to me 4% on twos and 390s, maybe 4% on 10s seem to be the right levels here.
Hey, Michael, before we let you go, as we mentioned at the top, you contributed to a story that is among the most read on the Bloomberg terminal about how bonds are back and increasingly money managers are hearing from clients about investing in bonds. You talk to professional bond investors each and every day, but talk a little bit about how that's sort of going back to the everyday investor who has their money managed by professionals.
Well, I mean, the important thing for investors, I think a lot of people have liked the idea of putting their money in T-bills. You know, what was it? We had T-bill and chill. That was the Jeff Gundlach expression last year. But a lot of big bond investors were telling me back in November, December, look, you've got to take advantage of these treasury yields at 5% because cash rates won't stay at 5% once the Fed starts to cut again. And I think they're being borne out here. That thesis is being validated. It's taken longer than people thought it would. Don't forget, everyone at the beginning of the year thought the Fed would be cutting in March, and to a certain extent, Chair Powell did kind of hint that was coming. But that said, you've now got treasury yields with 4% twos and below 4% in 10s and 5s. So if you're still stuck in cash, you're now sitting on, you've got an opportunity loss here because you could have rolled into a 5% 2-year back in April.
Right.
475 on 10s back in April.
Okay.
And again, these bond managers were saying you've got to start thinking about moving out. So I think now is time. So we had a record high in
Michael, we gotta run. Michael McKenzie, forgive me. This is Bloomberg.
It's 2:21 on Wall Street. I'm Charlie Pellet. We do check the markets all day long here at Bloomberg. We have got the S&P 500 index trading little change right now, back in the green, but barely. Stocks struggling to find direction here. The Dow down 157 now, down 0.4%. S&P 500 index up by about a point, while NASDAQ up 44, up by 0.3%. 10-year at 3.90%, the 2-year 4.00%. Gold up 1.5%, 24.69 the ounce, while West Texas Intermediate crude oil up 3.5%, 79.54 for a barrel of WTI. Bitcoin up 1.3%, 59,275 right now on Bitcoin. Bank of Nova Scotia has agreed to buy a minority stake in KeyCorp, which was among the biggest, or among the American regional banks hit hardest in last year's tumult. Price tag $2.8 billion as part of a focus on North America. Scotiabank is acquiring 14.9% of Cleveland-based KeyCorp. KeyCorp shares, they're up 8.7%. Recapping, S&P 500 index, little changed, up a point right now. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So check your calendars. It was 1 week ago that we had the market sell-off, but it was also 1 week ago that U.S. District Court Judge Amit Mehta ruled that Google had illegally monopolized the online search market. The decision has serious ramifications for Alphabet's flagship business and tremendous connotations for Apple as well. It's something we've been talking about, Tim, over the past week or so.
Yeah, much of the focus has been on what this outcome means for Google's multi-billion-dollar payments to Apple that ensure Google is the default search engine across iPhones and iPads. But a more pressing question may be what the case itself signals for the U.S. Department of Justice's separate antitrust lawsuit against Apple.
Bottom line, there's always a lot going on when it comes to Apple. And writing about Apple and its cash prospects in new research that is out by him is Bloomberg Intelligence Senior Technology Analyst Anurag Rana. He joins us from Chicago. Happy Monday, Anurag. You were busy, got some research out over the weekend. Help us make some sense, first of all, in terms of if Alphabet isn't making these payments to Apple, what does it mean in terms of their cash flow and their cash? Because you seem pretty upbeat about it, or at least their prospects.
So if you were to wait and see what happens with this particular case, when you look at Apple's core business, it's doing very well, even though the top line is not growing in double digits like it used to a few years ago. But even with 5 to 7% growth, tight cost control, this company is generating enough free cash. I think the biggest thing what we are trying to point out is when you look at the other large tech companies, somebody like a Microsoft or an AWS, they are going to spend billions of dollars over the next few years in order to expand their cloud data centers, invest in AI. But in the case of Apple, I think they are the ones that are going to stand out over the next 12 to 24 months because they are not doing that same level of spending because they don't have that kind of business. Now, the Google case you brought up is an important point, and that's a big risk for Apple. But we're still far away to figure out what the remedies are going to be. As long as there is no binding, if Google and Apple can renegotiate and figure out if people get choices, I think there is chances that they can, salvage some of that particular $20 billion revenue that comes in. Now, if they are able to, if the judge comes out and says, well, you cannot pay them anything, then that's a problem. But even in that case, I think it'll be a few years before Apple can make up for that revenue loss.
I want to go back to this idea of Apple not having to make those huge CapEx investments in AI like Microsoft and Amazon have to do when it comes to infrastructure and actually building out these facilities, Anurag. Is it a risk for Apple that they're partnering instead with other companies that are making these investments and not doing them themselves? Is there a chance that they could run into an issue with a platform taking off that's not their own platform?
Yeah, see, they are in the device business, in all honesty. When you look at the iPhone, they're really not into cloud computing or giving people infrastructure to build their applications. So that's a completely different equation in my view. It's like, getting electricity. You really don't need to own your own generators in order to get electricity. So when you look at Apple, they're basically saying, in the same case what they have with Google, they don't want to be in that search business. They're going to go try to get a partnership with anybody who has the best search business right now, and they will put that on their phones. They did that with OpenAI. They went out and talked to a bunch of people and says, who has the best large language model that would work well on their iPhone? and they chose OpenAI to be one of their partners. So that's part of their business model, and that's part of the reasons why they don't need to spend that much in CapEx.
You know, it's interesting. We talked with David Weston, who is a lawyer and spent a lot of time doing antitrust work specifically. And I do wonder about some of these big technology companies, Anurag, that they are successful at what they do. And is that a crime, that just because you're good at what you do? And I was actually having a conversation with one of my sisters this week, and we were talking about Google. And I'm like, but do you try any other kind of search engine? She's like, nope, because Google just works so well. So when is it a crime that you are really good at what you do and you just become big because of that? How do we figure out, when it is an antitrust issue and when it's not?
Yeah, I think, all these companies are generating billions and billions of dollars of free cash flow, which really will attract a lot of lawyers, as you can imagine. Now, let's say in the case of iPhone, if tomorrow, when I turn on my iOS or I install a brand new operating system, it'll ask me, which search engine do you want to use? It's going to give me 6 choices. Most likely or not, I'm going to pick Google. And that is going to help Google. I think the bigger question in this whole equation is, what happens to that payment that's happening?
Well, that's why, I think sort of counterintuitively, couldn't this actually be a great thing for Google if people end up using Google and choosing Google because they're not choosing a competitor, but then Google doesn't have to make these payments to Apple? That's just like icing on the cake. This could be a big win for Alphabet, right?
Yeah, exactly. I mean, that's what I'm saying, that in this entire case, it's Apple who's going to lose. But here's my counter argument. To that. Apple's a company with, as I said, over $100 billion in free cash flow. If they really wanted to fight Google in search, they can do it. They can go and acquire a small vendor and use that in their pipeline. Remember, they control distribution of 2.2 billion devices. Google's going to lose a lot of market share if it doesn't play nice with Apple. So, I get it that in the short term, they will be, you could say, benefit from it. But I don't think they would want to pick a fight with Apple on this one.
Interesting. The antitrust case, though, against Apple by the Department of Justice, they say to classify Apple as a monopolist, the government attorneys carved out its relevant product market as only including premium smartphones, a segment apparently distinct from entry-level and less expensive gadgets. I mean, it's kind of like you're dicing and slicing the market here, right?
Yeah. So when you look at Apple's so there are roughly about 5+ billion smartphones in the world. And Apple's market share is roughly about 20% or 1 billion. But yeah, you could make the argument if it was only the expensive category, they have over 50% of the market share. But there are only 2 players out there. Either it's Samsung or it's Apple. There isn't really a big third player in the premium market that anybody wants to deal with. But, we think 20% of the market share in the global smartphone market, that really is the big case for Apple, which is as people become more affluent, they will go out and get Apple because it's an aspirational brand for people in emerging markets. It's really the place you want to be. But in most cases, you don't even qualify to buy that product because it's so expensive.
Well, and the thing about, Apple with these large language models and all of the AI that's being, done, I guess, do they not care? Go ahead, and everybody else, you spend money, you develop it, and then we'll give you the device that people can play with it on. Is that what it's all about?
Yeah, but if I was to take the other argument of it is, if they started doing everything else, then people will say, well, they're using the distribution to unfairly, push their own product.
Right.
They're basically saying, if you build the best product out there, we will use it, and we will use it on the merit of the product. In this particular case, they didn't go out and pick, Google's Gemini on round 1. I think there's down the road, I think it may happen, but they chose OpenAI because they have, at this point, the best large language model out there.
Okay, speaking of the Apple being a device company, it's the iPhone company, no question. The iPhone 16, likely we'll see it unveiled in just a few weeks.
I was getting ready and thinking really hard, so was Paul Sweeney, about replacing my phone come later this year, and now I'm thinking maybe I shouldn't.
Well, that's the big question, because Mark Gurman out with his Power On newsletter over the weekend on Anurag talking about how this is perhaps one of those stopgap models that gives people a bridge to the next one, perhaps doesn't get people to do an upgrade super cycle. How are you thinking about it at Bloomberg Intelligence?
Yeah, in a similar vein, we don't think it's going to have a massive layout in year 1. Over a 3-year period, I think it's going to help. But at this point, we don't have, we are looking at maybe a 5% bump in total unit shipments sold next year, FY25 over FY24. And that's because the last 2 years has been kind of weak. The Apple's install base moves at a certain rate, and you refresh your phone when you, to be honest, when the battery runs out. That number used to be 3.6 years for a few years, but it's been extended closer to 4 years at this point. So at an average, globally, out of that 1 billion small, phones I talked about, people refresh it every 4 years. So I think that is what we're going to see. We're not going to see a massive bump because of AI.
All right, just to wrap up here, as you know, we're over the hump, if you will, in terms of half of 2024 already over. How are you thinking about the rest of the year when it comes to technology in terms of some of the big major themes, whether it's AI, CapEx spending? Are we going to see more kind of worrisome notes or worrisome updates, or do you feel pretty confident about the rest of the year?
See, I think from a fundamental point of view, this is going to be fine. I mean, I don't see any reason why the big tech companies, whether it's Microsoft or whether it's Amazon Web Services, their core business is strong and it will remain. The stock reaction is a very different game because that depends on interest rates and so many other factors. And that's really, we'll see what happens with that. But at the same time, they will spend a lot of money in order to beef up their capacity so that they can grow over the next 3 to 5 years. I think that is really, in our view, a good long-term play, but in the short term, it may have its ups and downs.
All right, got it. Listen, Anurag, thank you so much. Really appreciate it. Anurag Rana, he's our Bloomberg Intelligence Senior Technology Analyst, joining us from Chicago. Still to come on Bloomberg Business Week, more than half of all women invest in the stock market or own stocks, and yet their representation in the investment management space continues to lag. Our next guest is working to improve that. So we're going to talk with the CEO of Girls Who Invest. We'll get to that on the other side of the break. As we continue to watch the markets, and it's a pretty quiet day.
Yeah, speaking of stocks, we're seeing a little bit of red on the screen. The S&P 500 down fractionally, the Dow down close to half a percentage point. Well, the NASDAQ up close to 0.2%.
And we mentioned Apple. It was up about 1.5% at its highs. Right now, just about 0.25% gain as we speak. All right, let's get to world and national news. Off to D.C. we go, and Amy Morris. Amy, all yours.
All right, thanks, Carol. The U.S. is warning Iran of consequences if they plan to arm Russia. The Pentagon says it is aware of reports Tehran plans to provide Moscow with hundreds of ballistic missiles.
We've been warning of the deepening security partnership between Russia and Iran since the onset of Russia's full-scale invasion of Ukraine. This partnership threatens European security and illustrates how Iran's destabilizing influence reaches beyond the Middle East and around the world.
State Department's deputy spokesperson, Vedant Patel. Ukraine's military is taking control now of 28 towns and villages in Russia's Kursk border region, prompting a sixth of its population to flee the incursion. And for the first time, Ukraine's President Volodymyr Zelensky publicly confirmed that, yes, his forces have seized a swath of Russian territory. Columbia University is now amping up its campus security ahead of the fall semester, with commuters weighing in on the potential return of pro-Palestinian protesters.
Scary, something you never know what you're going to walk into.
Everybody's got the right to protest in the United States, so there it is.
You have a right to protest. I've been to a few myself. Just you gotta play by the rules. You can't break into buildings, then you're crossing the line, and they got just what they deserve.
Classes are set to resume September 3rd. Officials say this new protocol will remain in place. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. Little change for the U.S. stock market right now. S&P 500 index down 1 point, just about flat on the day. Light volume. The Dow down 169, down 0.4%. NASDAQ is up 39, a gain now of 0.2%. Stocks are struggling to gain traction ahead of key U.S. inflation data tomorrow morning and Wednesday, with the latest geopolitical developments curbing the appetite for riskier assets. 10-year at 3.90%, the 2-year 4.00%, spot gold up 1.6%, $24.70 the ounce, while West Texas Intermediate crude now higher by 3.7%, $79.70 for a barrel of WTI. B. Riley Financial has suspended its dividend. It is warning of new losses as the firm wrote down a portion of its stake in Franchise Group, a troubled U.S. retail business. It comes as Los Angeles-based B. Riley faces a widening investigation into whether it gave investors an accurate picture of its financial health amid a string of losses and a sagging stock price. Today, the stock price is plunging. B. Riley Financial down 51.6%. Recapping, little change on the S&P, a 2-point loss right now. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, last year, Bloomberg reporting on some research that showed that women make up less than a quarter of fund managers globally. This was actually according to some data put together and also put out by the nearly $50 billion pension fund HESTA. The biennial survey of about 80 listed and unlisted managers shows progress on gender diversity has marginally improved, with women making up 24% of investment managers compared with 22% in 2020.
Marginally, not significantly improved. So let's bring in Catherine Jolan-Kolscher, CEO of the nonprofit Girls Who Invest. It's all about transforming the investment management industry by attracting and advancing women investors, change makers, and leaders. And full transparency, Bloomberg is a non-financial supporter of Girls Who Invest. Catherine joins us from New York. Catherine, good to see you. Why do you think improvement has only been marginal and it hasn't been significant? Why is this such an uphill battle?
Thank you, Tim and Carol. I think this is an uphill battle because historically there weren't enough entry-level positions for women in investment management jobs, and therefore there literally weren't enough women to move up the ranks in organizations. And this is an industry where rite of passage still gets a lot of credit, so there's less likelihood of lateral moves, let alone at the C-suite level. So what we're seeing is the need to increase the number of women in investment management and entry-level roles, and then, of course, retaining and advancing those women so that they stay in the industry for the long term.
Catherine, how do we do that? We've been having this conversation, forgive me, I'm going to date myself, for a long time, decade over decade over decade, and we get it.
True.
Like entry-level, men, women, they're kind of on equal terms, and then as we start to go up the food chain in the investment world, it just doesn't pan out. Either women step away, they don't step up because for whatever reasons, or they're not supported. So, how do we get there?
So let me put it into some storytelling and context for you. From a storytelling perspective, very few of us grew up in the dinner table, very few of us women and underserved populations grew up at the dinner table hearing conversations about finance. So first and foremost, from a pipeline perspective, we need to inform individuals about this incredible career. And it is an incredible career. It's stimulating, it satisfies intellectual curiosity, it's well compensated. So there's so many good reasons to join investment management. But the reality is women are not necessarily hearing about this as a career path. And we need it to be dinner table conversation. And I'll put that in some statistics. So we will soon have 3,100 alumni by the end of this summer in just 8 years. For Girls Who Invest, we received 2,700 applications this year for our summer program. So there's tremendous interest in terms of the talent population. And when we look at our alumni population that's working full-time in the workforce, that's 1,200 women and gender non-binary individuals. 75% of them are staying in finance. So, Carol, we're looking to take that population that's staying in finance and continue to invest in their long-term career path. Do they have a mentor? Do they have a sponsor? Do they have pay transparency? Do they understand what it takes to get promoted? Are people investing in their long-term skill development? But you're right, it's not rocket science. It just needs to be done, and it needs to be done well. We are not trying to cure cancer. We are trying to give people a chance to advance in the workforce.
It's one of those things like, stop talking about it. We know how to do it, folks. Just do it,
Correct.
right?
Let's just do it and do it well and get it done. And with 75% of our population staying in the industry, it's clearly achievable. So that, again, this isn't rocket science and let's do it and get it done. And our talent population comes from over 200 different colleges and universities, has over 100 distinct majors. So let's also emulate what current leaders tend to have, which is liberal arts degrees and diverse academic backgrounds. And now it's so expected that people have gone to an Ivy League school and majored in finance. They'll settle for a major in econ, and that's just not the reality of current leadership. Current leadership was allowed to have more of a liberal arts background, and that was celebrated at the time, and it should be celebrated again.
So, Catherine, what's the metric that you use to make sure that what works at one end of the pipeline keeps working as a career progresses?
So that's exactly right. So we are looking at retention in the industry. First and foremost, our job is to help people enter the industry, and we think that we're doing that in spades. And then our next goal, which is in service of our alumni population, is to make sure that they're staying in the industry. And again, we're seeing that happen at 75%. So it's now about working in partnership with our firms. We have over 120 investment management firms with whom we partner to say, okay, this is your GWI, your Girls Who Invest talent population in-house. How are you working with them? We have great examples of organizations creating internal affinity groups for their alumni populations. I was just emailing with one earlier today, and they've divided their alumni population into subcommittees, and they're giving them mentorship and sponsorship opportunities. It really is tactical, but it's not hard.
Is it, though, still sometimes difficult for women, young women, who are trying to make their way up in the investment management space? I say that like kind of knowing the answer is yes, but tell me what you hear from the folks that you work with and the women you work with.
Absolutely. It's very difficult. And I think the reality is that there's still a lot of moments of being the only in the room. Mm-hmm. So you have to overcome, right? You're wearing multiple identities when you go into that business meeting or when you go into that room or when you're presenting to the investment committee. And those multiple identities, you have to check live in conversation to make sure that you're not being discounted for any of them. And we hear that from our talent population all the time. What's exciting for us, and we exclusively work with a Gen Z talent population as a function of when we've started. What's exciting for us is Gen Z talent does have the vocabulary to address these issues early on in their career. And sometimes that's scary for managers and feels uncomfortable. But the reality is they're going to walk with their feet if they don't like a job, and they're going to get a really good job in return. And they're going to talk about their compensation, and they're going to talk about the mentorship and sponsorship. That being said, it's very clear that there still are systemic barriers to their advancement, and we're here as a support system to help with that.
Catherine, 30 seconds, your advice to a manager in the investment management space.
I have advice is please take your team out for coffee and be informal. It sounds easy, and it is easy, but it really is important to make those personal connections and to open one's door to those conversations. And then, of course, to champion any population in the workforce through mentorship and sponsorship, but advocate for people when they're not in the room.
All right, going to leave it there. Catherine, thank you so much. So appreciate it. Catherine Dolan-Kolscher, CEO of the nonprofit Girls Who Invest, joining us on this Monday. Hey, a story we do want to mention, just crossing the Bloomberg, Johnson & Johnson, J&J, has cleared a key hurdle for advancing a $6.5 billion plan to resolve thousands of lawsuits by people who say its baby powder gave them cancer. This is according to people familiar with the matter. Right now, the stock is little changed here, Tim.
We did see, as soon as this news came out, the stock jump and move from losses to gains on the day today. And it is fractionally higher right now and did move a little bit higher on the news. Some more details, though. More than 75% of the group signed off on J&J's proposal through secret balloting that ended in late July. This, according to the people who asked not to be identified, discussing the results that haven't yet been announced as certified. Such a result would boost the company's latest bid to confine liability to a unit it set up as part of an effort to resolve the lawsuits.
Keep in mind, J&J has said its talc-based powders never cause cancer and that it appropriately marketed its baby powder for more than 100 years. Last year, the company discontinued the talc-based version of the product and replaced it with a cornstarch-based substitute. Again, J&J shares just up about 0.2%. All right, we're just talking about women in the investment management space. Speaking of investing, how about an oceanfront property at a discount?
Maybe at a 1/10 of the price that you would typically find.
Sign me up.
Nice home in.
Is there a catch?
There's a catch. We'll tell you about the catch on the other side.
Always is. All right, this is Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.
B. Riley Financial shares, they are plunging. B. Riley down 51.5%. It has suspended its dividend, and it is warning of new losses as the firm wrote down a portion of its stake in Franchise Group, which is a troubled U.S. retail business. And Vestas Wind Systems issued a profit warning for its full-year results in a blow to the wind power company's efforts to turn around steep losses in recent years. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden spoke by phone today with European allies about the increasing tensions between Israel and Iran. The whole world is watching to see if Iran retaliates for the killing of a Hamas leader. National Security Council spokesman John Kirby says it is difficult to know what Iran's retaliation could look like.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week.
The U.S. has also beefed up its military presence in that region. Secretary of Defense Lloyd Austin ordering the USS Abraham Lincoln Carrier Group, equipped with F-35C fighters, to speed up its arrival in the region, and also dispatched the guided missile submarine USS Georgia. The move bolsters Israeli defenses, and it could deter Iran. And the U.S. is warning Iran of consequences if they plan to arm Russia. The Pentagon says it is now aware of reports that Tehran plans to provide Moscow with hundreds of ballistic missiles.
We are deeply concerned by reports that Iran is planning to deliver hundreds of ballistic missiles to Russia, and we continue to communicate with our European partners and allies regarding potential measures we may take.
State Department Deputy Spokesperson Vedant Patel. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, thank you so much. Amy Morris there in our D.C. bureau. All right, folks, life's too short sometimes. And
YOLO, they say.
Right, so you think about, man, should I do something? Should I not? Will I ever get another opportunity? And David Moot assumed he'd never be able to afford his dream of owning a beachfront home on the Massachusetts coast, his vacation retreat for nearly 20 years, and then he spotted one on Cape Cod. Tim, the price, pretty affordable.
Yeah, only $400,000 for a home that typically would cost quite a bit more. It's in Eastham, just 25 feet from an eroding sand bluff, and that, my friends, is the catch, because with the tides projected to encroach 3 feet closer to his door each year, his investment could literally get swept away in just about a decade.
We've seen it, right? Anybody who spends time on a beach, you've seen the erosion that has happened, or trying to rebuild, sand brought in, and so on and so forth. Moot paid for the Eastham home 67% less than the nearly 1.2 million the seller initially sought back in 2022, so just a couple of years ago, on Nantucket, which is, of course, off of Cape Cod. Beautiful, beautiful, a retreat for the wealthy.
Expensive.
It's expensive. A seaside house at 28 Sheep Pond Road sold in June for just $200,000, about a tenth of its assessed valuation this year.
Okay, so if you're a house hunter and you have a little gambling spirit in you, maybe you'll be able to find more steeply discounted deals like those owners in prime U.S. beach towns are looking to cut their losses before the waves take a costly toll. The expectation of bargains could lure investors in vacation rentals, rich buyers able to withstand financial risk, maybe only for a while, because as warming oceans spawn stronger, more frequent storms and sea levels rise, more than $106 billion in U.S. coastal properties could be consumed by the ocean in under 30 years.
I mean, if it's 10 years, you and I were just talking off air. It's like, that's a short period of time.
This story focuses on oceans getting closer to properties. There's also the fire risk and the lack of insurability that's happening in many parts of the country.
Just ask anybody in Florida.
Exactly, California as well. So you're starting to see deals in parts of California for incredible homes, but how do you get home insurance for these homes?
In the Outer Banks, the risk is so imminent in some spots that the National Park Service has begun buying properties at steep discounts with plans to demolish them, because it's just, it's very sad. It's very sad, but
hey, maybe there's a deal.
Yeah, maybe. All right, everybody. For those who continue watching on television, the close is coming your way in just a moment. Tim and I continuing on Bloomberg Business Week. This is Bloomberg Late.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are 60 minutes away from the closing bell on this Monday, August 12th. Carol Masser along with Tim Stenivek.
I'm back.
He's back.
I'm back.
Man, like you never, didn't miss a thing.
Oh, last Monday felt really weird. I didn't feel totally...
Did you miss it?
I did, yeah.
Were you
on a day when you have the worst sell-off in... What was the superlative that day? It was like the worst sell-off for the S&P in a couple of years.
I don't know, something, but it
You're
felt
like, how am I not at work on this day?
Yeah, I
How is
know.
this a day that I'm off, especially in August?
Yeah, I know. But then from there on out, it felt like things started to calm down.
Things got pretty chill by the end of the week.
Anyway.
We want things to be chill, right?
Yeah.
Right?
Well, I don't know.
YOLO.
YOLO. All right. Coming up in the next couple of hours, folks, we're going to get a campaign update from our reporters who are following both the Harris and Trump campaigns.
Speaking of chill.
You and I have done deep dives into politics.
Yeah.
Sounds like you did a lot on your vacation.
It's not really the way you want to spend a vacation, but I couldn't look away. But that's
not
okay.
to.
Yeah, I'm a news hound. That's what we like to do. Also, what can AI do for Wall Street? We're going to talk to the CEO of a firm that's working to make traders faster. Think about it like this, Carol.
Yeah.
ChatGPT, but for Wall Street.
So, hey, ChatGPT, should I buy this now or wait another couple of weeks?
I'm sorry, I cannot answer that question.
What's the analysis? Well, I was going to check in with, a fascinating individual. He's worked for the government, so many different positions, presidents. He's the CEO of the U.S., so we're going to get into helping out and entertaining troops and their families, talk about the military aspect of our society and our community. Very important one, so curious to see what he has to say. Looking forward to that conversation.
All that and more over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Charlie Bell.
All right, I thank you very much indeed. 59 minutes to go ahead of the closing bell. The Dow trading lower now, down 0.4%. S&P flat on the day, struggling for direction, up by 0.5 point right now. We've got the NASDAQ Composite Index up 46, a gain there of 0.3%. Russell 2000 Index of small cap shares slumping now by 0.9%. 10-year yield 3.90% with a 2-year 4.01%. Spot gold up $38 the ounce, up 1.6%, while West Texas Intermediate crude oil is up 3.9%, $79.85 for a barrel of WTI. It is a busy week for economic data with a key reading on consumer prices Wednesday, producer prices tomorrow. The data will shed light on the health of the U.S. economy and the outlook for Federal Reserve interest rates. Laura Rame is chief U.S. economist at FS Investments.
Well, clearly we're facing a really nice soft patch of inflation today. I think when you look just a little further, several quarters ahead, some of the problems of rent, of services are probably not going to go away. I don't think the Fed has the latitude to just slash rates down 200 basis points over the next 4 quarters like markets want. Again, unless the economy really changes trajectory.
Laura Rame of FS Investments. JetBlue Airways has kicked off a $2.75 billion bond and loan sale backed by its loyalty program as the carrier seeks to raise reserves and fund general corporate purposes. Using a loyalty program as collateral is a popular tactic for air carriers. Delta and United were among borrowers that pledged their loyalty programs as collateral when the COVID-19 pandemic clamped down on travel. JetBlue shares are plunging now by 21.5%, United down 2.1%, American down 2.4%. Recapping, it is a mixed Monday here. The Dow, the S&P both lower. NASDAQ is higher by 0.2%, and the S&P just about flat on the day. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, 1 week ago today,
it kind
of seemed like everybody was panicking. There were calls for 75 basis point emergency rate cuts.
It didn't make sense.
It didn't make any sense.
No.
Now it seems like everyone's on vacation.
But it was unusual. Like we hadn't seen some of the drops that we had, it just hadn't, I don't know, it was significant. And it started in Asia overnight and, and we saw it through Europe. And that's why I think it was like, wait, what's going on?
Maybe I should go on vacation again.
In August, we often see selling in the U.S. market.
Volume is thin. So
what?
Volume is thin. So a lot of people, volume is light. So a lot of people are on vacation.
It's a good point.
Yeah,
it's a good point.
There could be, small trades having a bigger impact. Let's see what Abigail Doolittle has to say about all this.
Or you go on vacation and this is what happens.
Yeah, not scientific, just anecdotal. She's Bloomberg News Chief Markets Correspondent. She's here in the Bloomberg Interactive Brokers studio. How should our audience think about a week that was with such a big drop, a quick clawback, and kind of things like going back to normal now?
I wouldn't say that it's normal. I think that we're in a pause mode. Volatility breeds volatility. We've had these massive moves. So right now you have the bulls and the bears on pause, catching their breath after that wild selling that really, as Carol mentioned, started in Asia. It really started on July 9th when the yen started to strengthen against the dollar. The big question there is, why was that yen strengthening? Is it because of geopolitics? Was it because of election 2024? Was it because of bad assets in the Japanese banks? Right now we don't know, but what I know looking at the chart of the dollar yen is it doesn't look very stable. It looks like dollar yen is going to go down to probably 130 or so, and that could that selling in dollar yen could start, like in the next days to weeks. If that should occur, that would mean more of that yen carry trade unwind could happen, which would create more selling. All of the charts right now, like when you look at charts, you want after selling like that, you're looking for a capitulation bottom. A capitulation bottom is panic selling followed by euphoric buying. For me, I never really felt the panic. Yes, some of the declines were remarkable, especially the Nikkei. I wasn't awake to see that trade or see what it felt like, but we certainly didn't have the euphoric bounce higher. So what we're looking at is something called, to get super wonky, a bear pennant or a bear flag. It's basically this converging area of trading that's hanging from the big drop, and it's a pause before the sellers come back in and cause another big down day like last week.
I'm so glad you brought that up. I was listening to, I think it was something on surveillance with Tom and I think Paul was in this morning. I can't remember. Having said that, there was a guest who said, well, wait a minute, the S&P 500 still well above its 200-day moving average.
Ooh, not really. I mean, yes and no.
Well, but saying that,
She's got the chart.
So that the bull cycle or was still intact. And I was curious how you were looking at it.
Well, it depends on time frame. So I am looking at a chart of the S&P 500 right now. So we're not doing any live charting. I did do that this morning and it was fun and it confirmed this bearish picture. So if we were to take a look at the S&P 500 out of the pandemic low or any time before that, it's an uptrend. It's a long-term uptrend. There's also an uptrend out of the 2022 October low. There is a low within that uptrend last October. Right now, I'm going to measure this. We are about, let's see, we're a good 12% above that uptrend, which we will consolidate down to that uptrend at some point. It's probably going to be sooner rather than later. The 200-day moving average is there. The near-term uptrend is not intact because the near-term, the S&P 500 was basically almost in a correction right now, down about 6% or so. So, it depends on the time frame, but essentially the near-term dip buyers, they're not really in play. That's why the trade is so lethargic. The medium-term buyers are kind of there, and then there's some long-term, medium-term people who are just thinking of kind of getting out. And I would also say there's some opportunistic sellers that are kind of waiting to get into the picture. The question is why? What will do that? I suspect it could be the yen. It could also be PPI or CPI if any of those numbers come out wildly, not even wildly warmer. If they come out slightly warmer, the risk is to the downside.
Well, that's what's interesting is if they come in warmer, not even hotter, then you're getting a conflicting data point with the July payrolls report.
And for the Fed in September.
So how should traders and investors think about that if you have, some weakness when it comes to employment, at least in that report, but we're not seeing inflation come down?
I think that what it could mean is similar to earlier this year, because it doesn't really matter what I think, but in terms of what the markets have thought this year is when, do you remember these couple of reports that have come in this year when inflation was not going away? They were hot, quote unquote hot, really tepidly warm by, 0.1%. So it tells you that folks are really tightly wound, especially right now. Last time I looked at Warp, we're looking at 1 to 1.5 price hike cuts in September. We're looking at a cut in November despite the election, one in December. So that's basically 3 cuts this year.
So
I think I looked at that correctly. There's a chance I looked at it incorrectly.
So
but
potentially 75 basis points
by
or
the
325
by the end of the year. You know, so last December we were at 6, then we were basically at 1, now we're at 3. So if the data does not support that even by a slight amount, I think it could cause some big moves. Now that said, and this is a different view than I shared weeks ago around the 2-year yield, which looked like it was going to springboard higher. Those uptrends are now broken. It looks like the move is to the downside, which suggests it could be the Fed, but more so haven buying, which would match the yen haven buying with dollar yen coming in, because that of course means the haven yen is being bought up.
Okay, so it's not quiet.
No. And we saw that when the VIX spiked. I mean, we're still, 20? We've come down a lot.
That's an interesting chart.
Hurry up, 20 seconds.
Well, the VIX is an interesting chart. I mean, it's kind of just hanging out there. You know,
it's so much.
There is so much.
It's just hanging out there.
It's just hanging out there. It's going to be interesting to see, but I think that we have some big moves ahead.
I say that with love, and she knows that, because she knows there's a lot going on.
She always keeps us honest with the clock, Abigail.
It's important.
Abigail Doolittle, she's Bloomberg News Chief Markets Correspondent. Always appreciate. Let's talk, though, politics.
Yeah, because it's T-minus 84 days until the presidential election. Who's keeping track? Who's keeping count? Well,
we are.
Yeah, we are, and so are the political campaign teams, because it was a big weekend for both campaigns. On the Republican side, Senator J.D. Vance, he was all over the Sunday shows. I'm sure you saw some of that.
Yep.
We also saw former President Trump all over Truth Social. And tonight, he'll have a conversation with Elon Musk.
He will indeed. On the Democratic side, VP Kamala Harris tapped donors in her political home base of San Francisco after a swing state tour, introducing running mate Governor Tim Walz, raising more than $12 million at an event attended by top California Democrats that coming from her campaign. There's a lot going on.
Yeah, Adriana Lowenkrona and Akela Gardner are following the respective campaigns. Adriana on the Trump campaign and Akela on the Harris campaign. They both join us from our Washington, D.C. Bureau. Adriana, I want to start with you and just get an update from you on the Trump campaign, given that the former president has been all over Truth Social, and tonight he'll be all over the X platform. Critics have said, including the New York Times over the weekend, and I won't call the New York Times critics, but what they did report was that it was the worst 3 weeks of Trump's campaign. How does he plan to turn things around?
Absolutely. This definitely hasn't been a great few weeks for him. Of course, coming off of a time that really was a great few weeks from him, showing how quickly things can change. Again, just a month ago, he had survived an assassination attempt. He'd picked his vice presidential candidate nominee. He was winning on the legal front. And he wrapped up the RNC, which essentially acted as a coronation for him. And now, of course, we're seeing that he's struggling to deal with surging momentum from the Harris campaign, largely because he was focusing on Biden, focusing on the attacks on his age. And now, of course, he can no longer doing that. So we're definitely seeing a difference. We're seeing Harris up in the polls and Harris up in fundraising. And he is now really looking for any attack that can really stick.
Hey, Adriana, is his team freaking out? Is he freaking out? Sorry, it's not a really sophisticated political term, but that's where I'm going.
Again, things are not looking great. I mean, internally, there's definitely kind of a discussion. Most recently, I mean, one block that really he needs are black voters, other voters of color. We know that he shot himself in the foot there just a couple of weeks ago at the National Association of Black Journalists event, where he really kind of took an antagonistic, tone, of course, attacking and questioning Vice Presidential Harris's race. And so that, again, did him no favors. And so really we're looking at, of course, with the DNC coming up, all of the attention is on Harris and that surge. And we're looking to see how he can combat that. He, of course, just had a rally in Montana, not a swing state, but he is looking to go to North Carolina. Right. It was an area, friendly red territory for him. And the question is, when will he be out there in the swing states, the states that matter? We're going to see what he has to say on Wednesday. And then, of course, all eyes Chicago next week.
Yeah, and Pennsylvania, too, I believe, for a rally later this week as well. Akela, I want to bring you in here and talk a little bit about the momentum that the Harris campaign has been seeing. Back to the New York Times and what they reported over the weekend, a big poll, including that Siena poll with the New York Times, that showed a massive upswing in support for Harris compared to Trump in some key swing states. What's the Harris campaign saying about the momentum? How do they keep the momentum? And what are you hearing from insiders?
Yeah, this has been a really remarkable 3 weeks for Harris. It was only 3 weeks on Sunday since Biden dropped out and endorsed her. But I think that approach that they're taking really is that she is the underdog still. They're not trying to project any arrogance. She knows that she's up in the polls. And I think what I saw over the past couple days, just traveling with her on the road, is there is excitement, there is momentum, and it's a huge contrast to what we saw with Biden. He used to draw crowds of maybe a couple hundred people, maybe a couple thousand. She had upwards of 10,000 people at her rallies in swing states. And you can see just by the audience how much her coalition is expanding. I covered her as vice president. She mostly spoke to crowds of women, people of color, young folks, and these are people from all walks of life who are gathering at her rallies. And I think the polling is starting to show that and translating that she's actually getting people's attention as well.
That's good that there are big crowds. Any political strategist would say that. But is it also important that they don't get caught up in the narrative? I'm just curious what the campaign's thinking of. My crowd size is bigger than your crowd size versus policies that really matter to the voting American public.
Yeah, I think the crowd size, honestly, has been a point of contention because Trump has tried to push this false narrative, really, that there's conspiracies, that the crowds aren't real. But we are expecting to see later this week that she has a speech where she will begin to roll out parts of her economic agenda. We're told that it's going to be cost-focused. So this is really the first time that we're seeing this. But the campaign acknowledges they're building the plane as they're flying it. She did not expect to be running for president just 3 weeks ago. So they're building out their staff. They're building out their policies. And I think in the weeks ahead, we're going to start to get a fuller picture of what she and how she would approach the presidency. But I think a good basis would be to look at President Biden's policies. That seems to be what she is going off of.
It's running for president, the condensed version.
Yeah, it is. But it also has an effect on Donald Trump because he thought that he was going to be running against Joe Biden. And in fact, there is still a lot of complaints from him on Truth Social about not running against Joe Biden. And I'm wondering, Hadriana, about keeping Trump on message and what you're hearing from aides about keeping him on message, because
which message though?
But the message would be, talking about policies that and I'm not giving advice here, but the logical thing would be talking about policies that the Biden-Harris team over the last 4 years have done that have not worked for the American people, and why he offers a better solution. It doesn't necessarily seem like he's doing that right now.
Right. This is something when we're looking at the rallies and, of course, we're always as journalists excited. Will there be new policy? Will there be something new here? He did, a couple weeks ago when he was in Nevada, come out with no tax on tips. And we actually just saw Harris announce something similar when she was in Nevada. So that's definitely something that, of course, has caused, more kind of contention, on behalf of the Trump campaign saying Harris was copying him. But the point here being that the policies is definitely something that he should be focusing more on. Some of the rallies, he kind of tends to go down these kind of rabbit holes. But when he does stay on message, of course, meaning when he is talking about the state of the economy, when he is talking about energy, et cetera, you do feel kind of the cheers and the stuff from the audience. And so when I'm kind of at the rallies and thinking about what is resonating well with the rally attendees, that is definitely something that he should continue to do more of in terms of hitting on policy, as opposed to, again, some of these attacks on her race, her intelligence, a lot of them false. These especially when you're trying to bring in these independent voters, they're not landing as well.
We're going to have to leave it there, but I really appreciate you both joining us after a very busy few weeks on the road. Hadriana Lowenkron and Akela Gardner, they're following the respective campaigns. Check them out on X, on Twitter, and of course, on the Bloomberg Terminal.
You're listening and watching Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at a mixed market with the Dow, the S&P. They're both trading lower. We've got NASDAQ holding on to a gain of 32 points now, up by about 0.2%. Just a week after the panic selling that shook trading around the globe, equities in the U.S. are swinging between small gains and losses. 38 minutes to go now ahead of the closing bell, with the S&P down 3, down 0.1%, 53.41. The Dow is down 174, down 0.4%, while NASDAQ is up 31, up 0.2%. 10-year yield 3.90%, with a 2-year now yielding 4.01%. Gold up $39 the ounce to $24.70, a gain of 1.6%. And West Texas Intermediate crude oil higher now by 3.8%, $79.77 for a barrel of WTI. As for the broader market outlook, Brooke May is managing partner at Evans May Wealth.
We think that the market is going to grind higher between now and year end, but we're fully setting the expectation that clients should expect volatility in the weeks to come. The Fed, we've got 5 more weeks until they make their next rate decision, and we think at this point it's almost imminent that they're going to cut. The question now is it going to be 25 basis points or 50 basis points?
Brooke May of Evans May Wealth. Johnson & Johnson, according to sources, has cleared a key hurdle for advancing a $6.5 billion plan to resolve thousands of lawsuits by people who say its baby powder gave them cancer. J&J down now by 0.6%. Recapping, stocks lower, S&P down by about 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Carol, I don't know if you caught this article from Sejal Kishan a few weeks ago. It was about the changing view of ESG. We've talked about this a lot over the last 18 months, 2 years or so. He wrote that, quote, "The red carpet is being formally rolled up for the 3 letters ESG, at least over at II, the 57-year-old organization, has dropped the label, short for Environmental, Social, and Governance, from its annual analyst rankings."
Yeah, there's been such pushback against the kind of labeling. In its place is sustainability, a synonym many banks and money managers are using instead amid the increasingly politicized debate over climate change and corporate diversity in the United States. What a change if you go back, I feel like 10, 15 years, where there's been so much emphasis and a movement towards this ESG labeling.
Yeah, curious what Bud Sturmack has to say about all this. He's partner and head of impact investing over at Paragon Wealth Management. He joins us here in the Bloomberg Interactive Brokers studio. Paragon has about $8 billion in assets under management. Bud, how are you?
I'm good. Thanks so much for having me.
So you guys are kind of leaning into ESG when others are pulling back a little bit. Talk a little bit about why that is.
Yeah, I think we're in an era of personalization, and whether it's how we consume television or music, or where we buy groceries, or what kind of car we drive, I think you're seeing that start to evolve investing. And so what Paragon stands for is empowering our clients with choice, and we think it's important to include in our client onboarding process questions about understanding what values our clients bring to the table.
These are values that clients bring to the table.
Yes.
What do you mean by that?
So, as well as understanding client goals, financial planning, and understanding their investments, what do they care about most? Is it climate change? Is it gender equality? Is it racial equality? If those things are
What if they only care about returns?
That's fine. Yeah.
They don't care about any of the other stuff.
That's totally okay. But we think it's important in this day and age that we ask the question, because it brings a whole nother layer of ability for clients to connect with their portfolio if that's something that they believe passionately about.
But, if you build it, they will come, that kind of thinking. So I guess my question is, are your clients still saying, hey, we like this ESG thing, we get it, we understand, we want to commit money to it?
The answer is yes, but I also think that you hit on something before, which is people are moving away from the term ESG. So sustainable investing, values-based investing, we're not regularly using the term ESG. Again, I think it comes back to client values. What do they care about most?
So where did ESG get it wrong? What is it that it's just kind of mind-blowing how much time and energy and money we spent talking about it, and then now it's kind of getting, although things evolve and sometimes things come out better on the other side. But so what happened?
It's funny because ESG really is research. It's data.
Yeah.
And the term sort of got turned into investing, which it's really not. It's a tool, right? So I think
it's vulnerabilities, isn't it? Like
it can
climate
be risks.
exposure,
It's risks,
right?
yeah.
Exactly.
Yeah, I think where it sort of went awry is maybe two things. You have on the within the investing landscape, you have mutual funds and ETFs that label themselves ESG or sustainable. And when a client is buying into that fund, they're sort of having to adopt whatever the fund manager's view on sustainability is. The client may agree with that view, they may not. And so then you have the ESG data companies, right? They're taking very complex E, S, and G data, and they're trying to wrap that up into a nice score that everybody can say, oh, this is a very sustainable company, this is not.
Right.
The problem with that is that the E, S, and the G data, those data points might actually be very accurate and succinct, but wrapping them into a nice, neat score invites subjectivity. And so
governance might be easier than environment. Like some of it might be easier to measure than others, right? Also,
I think that's true, but trying to wrap it up into a nice, neat score, and the criticism that was invited from that was that, oh, this ESG data company rates Tesla very high, while this ESG data company rates it low, and that this and it basically brought in criticism of ESG in general.
Right.
Well, maybe the E is a positive for some of these when it comes to data, but the G, when it comes to governance, and who's on Tesla's board, for example, doesn't necessarily pass muster for this other organization, just for example. I mean, the E, S, and G are three completely different things.
That's exactly right. And I think...
And maybe some people would have a problem with the social part of it.
Yes. And so when we're talking about bringing it back to what the client cares about, then you have an opportunity to say, okay, this client cares about the environment, so maybe Tesla would be in the portfolio, or this client cares mostly about gender equality. So you're applying a different lens. It's what the client cares about, and it's building the portfolio stock by stock around exactly that client's value.
It's true customization.
Yes.
So here's what you like. I'm going to go find companies that meet those metrics. If those companies don't perform, don't put them in my portfolio. Is it as simple as that?
Well, it's really
what's the balance?
It is trying to mirror the index performance. So whether you're talking about an S&P 500 or a Russell 1000 or whatever your underlying index is, you're still mostly owning the industries and the industry weightings, but you're tilting away from the worst companies that the client would disagree with.
Yeah.
And you're recreating the index. So it does, yes, you're inviting tracking error if a client really is like adamant, I don't want several different industries or exposures to, you could increase the tracking error a little bit, but most of what we've seen has been that the underlying portfolios do closely track the performance of the index.
Does it make it so oil companies are just not in there because they don't have the E part of ESG?
If it was a climate change focus for a client or the E was the most important factor, then most likely those would not be included in the portfolio.
But an automaker, it's a lot of, traditional, still gas-burning cars, but they're increasingly moving into EV. Do you have a conversation with an investor, or how does something like that?
Yeah, so we're not making the investment decisions necessarily. We're hiring outside managers to do that, and they have very finite data that can bring more to light in that conversation, and we can have that conversation with a client. But the data really is quite good, and we can show clients, here's the companies that would fall into the portfolio, and here's what would be cut out. How do you feel about that?
So it's that specific, and you can kind of pick and choose.
Yes.
Interesting.
Is the objective you said is to match the major indices rather than beat them?
Yeah, it's really to track. It's really a passive approach.
Okay.
There are
with net of fees.
So that's gross.
Okay.
Yeah. The underlying indexes. I'm sorry, I just lost my train of thought.
No, that's okay. I'm just wondering about the sales pitch when you're making it to clients. So it's like, okay, we're gonna in your portfolio, we're gonna have, your portfolio is going to match the index, but it's going to not include the companies that don't necessarily align with your own values.
Right. I was gonna mention that.
Yeah.
It's a Monday in August. You are given a pass. You should have seen us earlier. Is absolutely correct.
I was just going to mention that in some cases, like in that direct indexing portfolio, you can tilt towards companies that maybe are the leaders on various ESG factors. Again, that would be specific to that client, but maybe your portfolio will be more tilted towards clean energy or different things like that.
So basically, an evolution of ESG.
Yeah, I think this has been a huge evolution in the field in the last 10 or 15 years, especially the last 5.
Right.
I mean, yeah.
And a pushback. It's kind of fascinating to see. But thank you so much. Really appreciate it. Bud Sturmack, he is partner and head of impact investing at Paragon Wealth and Management, joining us right here in our interactive broker studio. I think about all the conversations we've had on ESG over the years. It's fascinating to see, I feel like over the last few years, the pushback against the space, but it continues to evolve.
Well, kind of a deep tease. In about an hour, we're going to be joined by Darlene Goins, who's head of philanthropy and community impact over at Wells Fargo. 4 years ago, they invested over $400 million into nonprofits that deploy money directly to companies that were impacted by the pandemic, and there's a big racial component to it as well. So, they're sticking with ESG too.
All right, well, good to know, and looking forward to that conversation as we continue it. Market's a little changed, but we're going to go back to world and national news. Head to D.C. and Amy Morris. Hey, Amy.
Hey, Carol. Israel says today it is at its highest state of alert. President Biden spoke by phone today with European allies about the increasing tensions between Israel and Iran. And now the whole world is watching to see if Iran retaliates for the killing of a Hamas leader. National Security Council spokesman John Kirby says it's hard to know what Iran's retaliation could look like.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week.
And the U.S. has beefed up its military presence in the region. Secretary of Defense Lloyd Austin ordered the USS Abraham Lincoln Carrier Group, equipped with F-35C fighters, to speed up its arrival in that region and dispatch the guided missile submarine USS Georgia. As the U.S. is warning Iran of consequences if they plan to arm Russia. The Pentagon says it is now aware of reports Tehran plans to provide Moscow with hundreds of ballistic missiles.
We've been warning of the deepening security partnership between Russia and Iran since the onset of Russia's full-scale invasion of Ukraine. This partnership threatens European security and illustrates how Iran's destabilizing influence reaches beyond the Middle East and around the world.
State Department Deputy Spokesperson Vidant Patel. Ukraine's military, meanwhile, taking control of 28 towns and villages in Russia's Kursk border region, prompting a sixth of its population to flee the incursion. The acting regional governor told Russia President Vladimir Putin more than 120,000 people have left their homes. Another 60,000 are waiting to be evacuated. He says Ukrainian forces have penetrated at least 7.5 miles into Russia and control a border area about 25 miles wide. And for the first time, Ukraine's President Volodymyr Zelensky has publicly confirmed that, yes, his forces have seized a swath of Russian territory. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got little change for the U.S. equity market. The Dow lower, S&P lower, NASDAQ is higher. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed in a choppy tape with the Dow currently down 190 points. S&Ps are down 8, while NASDAQ is higher by 12. The U.S. 10-year yield at 3.91%. Gold is rising by 1.6%. Oil is also climbing. And Bitcoin, that's higher by 0.7%. Of the main 11 S&P sectors, leaders were tech and real estate. Telecom was under pressure, and leaders to the upside in the Dow, Walmart and UNH, while Boeing and Procter & Gamble each fell 2% and led to the downside. In the activist space, Starbucks is said to be near a pact to give Elliott a board seat, and in the tech space, NVIDIA gained 4.5%. Wrapping things up, Home Depot reports before the opening bell tomorrow morning. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes to go until we wrap up the trading day, the first trading day of the week. And because things have it's not like a week ago, last Monday, when everybody was using the word panic and concerned about what was going on in the financial markets. It's a much calmer day. And so we wanted to do something a little bit differently.
Yeah, we're joined by the CEO of a firm that says it's building AI to help make traders faster. Toggle AI is the company. It's backed by VCs, as well as Stan Druckenmiller and Thomas Petterfy. We should remind you that Thomas Petterfy is the chairman of Interactive Brokers, the sponsor of the Interactive Brokers Studio. We got with us Jan Szilagyi, CEO of Toggle AI. He joins us here in the studio. Jan, good to have you with us. How are you?
Very well, thank you. Thanks for having me.
So you're doing something pretty cool over at Toggle. Apart from, among the things that you're doing is you're working with Microsoft to build out this ChatGPT-like LLM for traders to use. What's the vision here?
The vision for the team that really comes from the hedge fund background is to create a better platform to take advantage of all the data that we have available to make investing decisions, right? You have research reports, you have time series data. There's just a lot going on every day. For example, just on Bloomberg, you have 18 headlines per second. It's impossible for humans to absorb all of that and process it. So we've built a platform that allows a hedge fund investor to connect the dots faster, understand how things that are moving are impacting different assets they care about.
Based on what data? What's the data that goes into this model?
So we have a range of different data sources. We have data that come from, company fundamentals. We get data from the Federal Reserve. We get data, for example, from various research reports, company filings, company presentations, and so on. It's extremely wide-ranging, and that's partly the point, because we think that with the help of AI, you're now able to look across all of these different types of data points.
So you would essentially create, or the firms that you sell the tool to, would create their own custom LLMs for whatever trades they're working on, right? Because they wouldn't have the same inputs, because then it just becomes a commodity, whereas everybody has the same analysis of the information.
Actually, maybe the way I would explain this is that you don't have to have your own custom LLM. We use LLMs primarily as a way to help you navigate our system, so that instead of you having to press a button, you can say, I would like to know whether or not fast food restaurants do poorly when gasoline prices rise 10%. It's the kind of instruction that you might give to an analyst. And then you rely on the system to go and do the analysis, fetch the data, and then give you the answer. Then you can have a little bit of a back and forth that way. But it relies on our proprietary knowledge graph to be able to connect these dots and say, actually, for gasoline prices, I'll use the first future. And for fast food restaurants, I know which set of tickers I require.
Jan, what would you have done, though, during the pandemic when all the meme stocks, which most would argue weren't necessarily trading on fundamentals, and it was the retail investor out in a big way. Like, what data would you look at? How would you anticipate, or how would you analyze something like that?
Yeah, that's a very different phenomenon to analyze, because it obviously is something that hadn't really happened before, not in that kind of way, right? The retail investor was really seen to have a lot more power than I think people had anticipated. So I would say that in that case, a system like ours would have relied a lot more on some of the sentiment data and some of the news, as opposed to, for example, price data from 10 years ago and so on. So if there's an event that doesn't have a lot of repeated occurrences,
right,
you need to be much more focused on things that are happening now, on what people are talking about and so on.
So like social momentum, social velocity?
For example, yeah, those would be the types of analysis that you'd be looking at. Now that obviously can be a lot more wrong, because again, you don't have a lot of prior experiences to say like, oh, I can see what the connection is here.
What is the LLM product different from other products that you're building at the company?
So really, we use foundational large language models, including the ones from OpenAI and others, in order to do two things. We use them to extract information from a variety of different articles, and then we use them as a way for you to be able to use the analytics engines that are available for all of our users. The LLMs themselves are not different from what others might be using, but how we're using them is very different.
How do you mentioned, as an example, giving an LLM a prompt that you would, in the past, maybe ask an analyst to do. Who are the winners and losers when it comes to jobs here? What's the adjustment here? Does the hedge fund not need that analyst anymore because it has this tool?
So we're currently only opening this up to a small number of hedge funds to kind of test the concept. But what we have seen immediately is that actually the analysts benefit, because this is the sort of thing that they would have had to do, but where they really shine is trying to be forward thinking. So yes, you have to do the analysis to understand what has happened in the past and have some understanding of the sensitivities. But building a spreadsheet would have taken 2-3 hours of your time, during which maybe you would have been able to do other things. So I think of this as us giving the superpowers to these users rather than replacing them.
So augmenting their work.
100%.
But I always think about hedge fund guys, men or women or whomever, are looking at things differently and have their own special algorithms that lets them find pockets of opportunity in financial markets. If you're creating, I'm just curious if that ultimately you're going to be creating data for more people to find those opportunities. Do those opportunities kind of go away? You know what I'm saying? That if a lot of people are chasing and getting access, yay, democratization of really sophisticated investing strategies, but the more that do it and get that advantage, does that advantage kind of go away?
I think it's a great question, and one that we have to think through very carefully. But I would give you a comparison, for example, with the Bloomberg terminal. By now, everybody in investing industry has one, right? And yet there are still opportunities that exist. And you would think, okay, but if everybody has access to the same data, why do we still find these dislocations? Why do people still disagree? Similarly, with the Toggle terminal, we are looking specifically at how questions are being asked. And not everybody has the same risk appetite, not everybody has the same investment horizon, not everybody asks the same questions. So the conclusions they arrive at could be very different.
All right, got to ask you, only got about 30 seconds. You hold the record for the fastest Harvard economics PhD. How quickly did you get it?
2.5 years.
2.5 years. What does it normally take?
I think it's about 5.
How'd you do that? Did you use ChatGPT?
I wish I had it. Probably could have cut that down even more to write the thesis.
Or I believe it's Chat PhD.
Chat PhD.
Ooh.
Very, very cool stuff. Fun. Let us know how things go.
Yeah,
I mean, performance-wise, you guys have back-tested it? You're doing the strategy?
We back-test it every day, basically, for all the insights and so on. And so there's a lot of curation that goes into that.
Very, very cool stuff. Jan, thank you so much. Look forward to continuing this conversation. Jan Szilagyi, he is Chief Executive Officer of Toggle AI, joining us right here in our Bloomberg Interactive Broker Studio. Folks, we've got about 10 minutes left in the trading day. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Johnson & Johnson has cleared a key hurdle for advancing a $6.5 billion plan to resolve thousands of lawsuits by people who say its baby powder gave them cancer. The sources say more than 75% of the group signed off on J&J's proposal through secret balloting that ended in late July. J&J shares, they're down today by 0.7%. Starbucks said to be discussing a settlement with Elliott Investment Management that would give the activist investor representation on the board of the coffee shop chain. They say Seattle-based Starbucks is in talks to add Jesse Cohn, a managing partner at Elliott, to its board of directors. Starbucks is also said to be considering setting up committees to review capital allocation and operational improvements. Starbucks shares today, they're up 2.4%. Analysts have been raising price targets for Expedia since the travel company reported earnings last week. According to data compiled by Bloomberg, 7 analysts raised their price targets by an average of 7.7%. And Bloomberg caught up today with Adrienne Gorin, Expedia's CFO.
We were very happy with our second quarter results. We saw an acceleration in our consumer business, which is what we were looking for, and then continued strength in our B2B segment and in advertising. But it's true, as we look at the third quarter, we have seen some softness. It's been a few quarters in a row that air ticket prices have been coming down, that the price of car rental days have been coming down, and we just started seeing a bit of that also in the third quarter, so we're keeping an eye on it.
Ariane Gorin, who is Expedia's chief executive officer. Expedia shares today down by 2.4%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, about 4.5 minutes left in today's trading session. Going to head over to our TV colleagues in just a moment to cut you down to the close on this Monday. A little quiet day, but we've got a bunch of economic reports coming up. Why are you, squinting?
Just getting caught up on everything I missed last week. Did you watch the Olympics?
I watched a bunch. I watched the opening ceremonies. I did a lot of taping, or went to Peacock, former gymnast, so I wanted to watch all the gymnastics. Okay. But then I would get into the I would tape prime time, not tape, DVR, sorry, and go from 8 to 11 and just go through it. It was kind of fun. I saw some swimming, saw some running.
Breaking? Did you watch the breaking?
I did not see any breaking.
She didn't see breaking.
Why are you guys laughing in the control
Because
room?
that's what everybody was talking about, was the breaking.
Did you watch breaking?
I wouldn't say watched. I definitely saw some of it.
Did you guys all watch?
It's like...
Okay. Did you like it?
Watch it like you'd watch a train wreck in some of it, right?
Shrug in the shoulders.
Yeah, no, everybody, they all know what I'm talking about. It was
Who
funny.
said the Australian girl was funny?
Raygun.
Oh.
Yeah. Okay, I don't know if can everyone hear you, Maruful, or is it just us? Oh, so Maruful on our board was just giving us some insight into why everybody was talking about.
I guess I have to go back and watch it.
Yeah.
I don't know, I missed that. I watched a lot.
I watched a little track and field over the weekend.
Yeah.
That was pretty cool.
I loved seeing the Olympics against Paris. It was just beautiful.
Yeah.
Eiffel Tower, I love the floating balloon, I just loved it all.
So
Lady Gaga I didn't get, but that's to be continued too.
One story that
I love Lady Gaga, but it was a little strange.
Nancy says that breaking won't be in the LA Games.
Why is that?
I don't know.
What's up with that?
She said that yeah, I don't know.
Oh, Marufo.
Nancy's because the host nation gets to pick. I think that was from
You mean one extra sport?
Yeah. Okay. Cece's giving us all the details. Flag football.
Flag football.
Okay.
I can't wait till they do
I think we have to apologize to everyone who were we're having a conversation with the control room.
I'm waiting for our bosses to be they can't
we're about to get
hear
an email
when you talk to the control room.
We got to make it so the control room can talk out on air because we're getting some great info.
Bob, are you listening? Colin, are you listening? Can we work on
I'm sure there's a button you can press. The reason we're talking about this is because a lot of people are obsessed with the medal count by country. The Wall Street Journal's got a great piece that talks about the university that did the best. Can you guess which one it is?
Stanford?
It's Stanford, yeah.
Whoa, total guess.
Known for athletics.
And
Check
MBAs.
it out in the journal.
And MBAs.
Yeah, MBAs as well.
All right, we're heading over to our TV colleagues, going to count you down to the close on this Monday. Countdown to the close starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Teal, taking you to the closing bell. Here with help. It's our global simulcast. Scarlet Fu joining us in the television studio. Carol Masser.
I need help.
Still in the radio booth. Oh, God. Yeah, say it again. And Tim Stenovic, welcome back after a much-deserved time off as we welcome our audiences across all of our Bloomberg platforms. Tim, have you helped Carol out today?
She's helped me. I've helped her.
Yeah.
Always.
Yeah, we're always looking
Big
out for each other.
Big assist. Really quiet day here, right? It's like we're waiting for maybe a couple of economic reports. Oh, yeah, we are. A couple of inflation reads and a read on retail, and then we got weekly jobless. So I feel like we're going to jump from data point to data point.
Yeah, CPI, PPI this week, certainly important ones. Not necessarily in that order. Let's go PPI, then CPI.
Nice.
And then next week, of course, Jackson Hole. And, you know, while I was gone, I heard people were screaming about an emergency 75 basis point rate cut.
That's gone.
Yeah, that's gone. Some people. Like I left for a week. I left for a week.
A couple of hours on one day.
Crazy.
Yeah. What guys? What happened?
Nothing really, Tim.
Okay.
I mean, if you look at the price of where the S&P closed the day you left, you look at the price of it today, absolutely nothing happened.
Nothing happened.
There was a big freak out, and people have since calmed down. And right now, to Carol's point, there's a lot of anticipation before these big data points. You have volume in the S&P 500 off 25% from the 20-day average.
Yeah, Tim, you definitely picked a good week to go on vacation. I think the city was saying we're looking for, what, about 1% move for the S&P on Wednesday, which would correspond to CPI day. So we'll see if we wind up getting that or picking up at all for the VIX.
All right, not a whole lot of price action today. Just a couple of S&P sectors in the green, but not enough to really elevate the index overall. And S&P 500, as we wait for these numbers to settle, is basically going to close out the day unchanged. The Dow Jones Industrial Average is decidedly lower by more than 100 points, or 0.3%. The NASDAQ Composite higher by 0.2%. And when we take a look at the small and mid-cap space, we did have meaningful moves lower. S&P 400 mid-caps down 0.7%. The Russell 2000, Carol, down 0.9%.
All right, back to the S&P 500 I go, and you've got most names in the index lower today. 340 names losing ground on this Monday, 160, Scarlett, to the upside.
Yeah, and with the S&P 500 unchanged, it's really interesting to see the breakdown in the sector groups, because you'll note that there's 11 sector groups and 8 of them are in the red. REITs, communication services, and consumer staples are the biggest decliners there. Technology is the main reason why the S&P 500 is unchanged. It's up 0.9%. Energy also holding up its end of the bargain, gaining about 0.5%. Utilities, which have become a favorite safe haven, up by just 0.2%.
All right, guys, to the individual gainers we go. NVIDIA, it's a top gainer on both the S&P 500, NASDAQ 100 on this Monday, up about 4% here at the close today. BofA making it one of its top rebound stock picks, outlining why a rebound scenario makes sense for the semi sector. And if the semiconductor sector bounces back, NVIDIA stock looks like a good play. And he assumes a sector rebound. He says likely in the fourth quarter of the year. Seasonal headwinds could fade by then. And so let's not forget that NVIDIA does report earnings at the end of the month later on. So liking this name, and so we did see a pop in it. Starbucks also trading higher, though at its highs about 4.5% today, finishing the day with about a 2.6% gain. The Wall Street Journal reported that activist investor Starboard Value has taken a stake. Starbucks discussing a settlement with Elliott that would give the activist investor representation on the board. That, according to people familiar, Elliott in addition wants Starbucks to commit to reviewing its business in China. So that was definitely out there. I think I saw you guys talking about it earlier.
Did you know they were selling boba tea?
What's boba tea?
That's what the
boba tea with the little
bubbles.
things on the bottom?
I don't get
that. The tapioca pearls or
It's
whatever.
a thing from Taiwan. It's taken off in the last couple of years.
My daughter loves it.
Kids love it.
Yeah. Well, it's sugar.
Adults too,
Yeah,
Tim.
exactly.
Boba.
Sugar.
Really?
Yeah, adults love it too.
Our producer Meredith says boba is the best. All right, so KeyCorp, that was your number one gainer in the S&P 500 today, folks, up about 9%. And we did see this after receiving a minority investment from Scotiabank. So definitely sending that one higher. All right, Tim.
Hey, there were some notable decliners today. Do you want to start with JetBlue? Shares just got slammed today, falling 21%, the biggest drop on record. This after JetBlue announced that it kicked off a $2.7 billion bond and loan sale backed by its loyalty program. JetBlue looking to raise reserves and fund general corporate purposes. Meanwhile, Moody's Ratings and S&P Global Ratings both downgraded the airline to one notch above CCC levels. The company did say it plans to sell $400 million of 5-year convertible notes notes to repurchase some of its convertibles due in 2026. This according to people familiar with the situation. Shares, again, down 21%, the biggest drop on record. Another notable decliner, B. Riley Financial, ticker RILY. Look at this, falling more than 50%. A new round of write-downs amid a widening U.S. investigation into whether it gave investors an accurate picture of its financial health. The SEC assessing whether B. Riley adequately disclosed the risks embedded in some of its assets. This according to people familiar with the matter. And finally, keep an eye on shares of DJT, Trump Media and Technology today. The former president is back on Twitter after many months away from the platform. He's also got a conversation tonight with none other than Elon Musk. The company did report earnings after the bell on Friday. They reported a net loss for the second quarter of $16.4 million and revenue of about $840,000. The market cap's still $4.8 billion. I think many people would argue that it's not necessarily driven by fundamentals. The stock down by about 5% today.
Shocked. I tell you, shocked, Tim, not by fundamentals. I take a look at the bond market here. It actually is interesting. We are seeing a bid. Earlier this morning, it was a whole lot of nothing, but now seeing a bid, particularly in the front end. Yes, we have the economic data coming out this week, but we also have that geopolitical risk coming in as well. Headline after headline about potential Iran retaliation to Israel, U.S. moving ships into the area. So, there's that percolating potentially also in the bond market, guys.
Yeah, amazing to see all those 4% levels, right? Like if you go back a week ago, pretty wild. All right, guys, one thing that certainly caught our attention, and this has to do with consumers, that they are increasingly concerned about falling behind on their bills. And then you've got delinquency expectations rising to the highest level since the onset of the pandemic. This is coming from the New York Federal Reserve Bank.
Okay, so let's talk numbers here. The average likelihood that consumers would miss a minimum debt payment in the next 3 months rose to 13.3%. It's the highest level going back to April of 2020. This according to the Fed. The survey released today, the Federal Reserve Bank of New York. The stress increased the most for people earning less than $50,000 a year and for those with a high school degree or less.
And this tracks with all the anecdotes we've gotten over earnings season with consumers not spending as much on traveling, on hotel stays, and on discretionary items this summer, certainly compared to last summer, which felt like a high watermark in terms of spending.
Yeah, and we'll get, of course, another read, I guess, when we get those University of Michigan sentiment data numbers later this week here. And I guess it gets to this idea here of what the real read is on the economy. Alex, is it really about the data or is it about how people feel?
Yep, and it's K-shaped, right? So if it's K-shaped, then how do you deal with that if you're the Federal Reserve and dealing with sentiment and also the data when one area is doing poorly and one area is doing really well, as Scarlett will tell you in this next segment.
Very nice segue, Alex Steele. There's a good story on the Bloomberg.
She knew it was coming.
Yeah, exactly. About how certain home buyers are picking up some property, some seafront property, beachfront property in places where water is rising and their property may not even be around in 5 years' time as long as the water level is rising. You can buy a Cape Cod house for, get this, $395,000 compared to what it was selling for initially, which was $1.195 million in 2022.
Wow.
Yeah.
That is a serious discount.
Yes.
But there's a catch.
Well, I guess that's the question is, how much does it cost to insure it?
Well, it actually costs more, definitely, but like, is it going to be there? Is a bigger issue.
That costs like $1.6 million to insure. I thought it was an interesting story because I had a family member who did something similar, bought a coastal home, someone who's in retirement age, and it was the same attitude, which was like, you know what, by the time this thing washes offshore, I'll be long gone, and it's somebody else's problem then. So yeah, I guess so.
Yeah, well, I mean, this is what this guy that's profiled in the story, right? He's like, life's too short. So what if it's gone in 10 years? I'll have 10 years of a beachfront property that I couldn't have afforded otherwise. It's pretty wild. But it says something more broadly about what's going on in terms of climate change.
Yeah, Nantucket, an island that's known for multi-million-dollar compounds. There was a seaside house sold in June for just $200,000. That's just a tenth of its assessed valuation. So the likely, market valuation, if it weren't about to wash away, would be much higher.
They still got to pay the taxes on the $2 million.
They still have to pay the taxes, but you can't get a loan on these things, right? You can only pay cash for these homes because no bank is going to underwrite this loan.
I just feel like this is a perfect example of the two stories we just talked about. Like one story is about how consumers have revolving credit and there's worries about delinquency, and the other one is like, hey, let's drop $200,000. It's a really big deal. I mean, it's a great deal compared to over $1 million. Let's do it and stay there for 10 years.
K-shaped, right? Where's Peter Atwater when we need him, right? Like, it says so much. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again. Alex is heading out. Scarlett and Romaine continuing on TV. And Tim and I are going to get back to work here on Business Week on Bloomberg Radio. But we will all see you same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Monday, August 12th.
How are you feeling?
I feel good.
You are good.
I feel good. It's nice to be back.
Yeah, it is good to have you back.
Thank you.
Yeah.
I feel like I missed Monday and Tuesday. Had a little bit of FOMO.
Yeah, I know. And then by Wednesday, you were like,
but I was like, yeah.
I don't know who they are. I don't care what they're doing.
Everything was good. I was on vacation. It takes a couple of days to sort of disconnect when you're on vacation.
It does.
But then, it was a good trip. Thank you. Hey, you and I have been doing this together for quite a while.
We have.
Including, 4 years.
Yeah, if you think about it, it was the depth of the pandemic.
Yeah, it was.
Yeah.
It really was. Think back to that environment, if you will.
Very different.
The pandemic was raging. Mm-hmm. Tensions in cities were high. People took to the streets to protest the murder of George Floyd. Around that time, we wrote a lot about this at Bloomberg News and at Bloomberg Business Week. A lot of companies and stories about companies, big and small, joining the conversation, making commitments of different types.
Mm-hmm.
Wells Fargo, one of those companies, 4 years ago, it committed more than $400 million to nonprofits. The idea was to help local businesses that were hit by the pandemic, so the nonprofits would deploy the cash to local businesses. And according to the bank, the vast majority of those businesses they identified as racially and ethnically diverse.
Darlene Goines is head of philanthropy and community impact at Wells Fargo, here to talk a little bit more about what they are up to and how it is going. She joins us from San Francisco. Darlene, nice to have you here. How are you?
I'm great. Thanks for having me.
Yeah, it's great to check in with you. Tell us how things are going. And, 4 years ago, you guys committed this big chunk of change, $400 million to those nonprofits that really helped out local businesses hit by the pandemic. Where are you in that, and what's been the impact of it?
Sure. So let me start by giving some context. So back in 2020, the pandemic hit, and immediately millions of small businesses, often those small businesses that help make communities feel like home, they immediately struggled. And so we really wanted to create a national inclusive small business recovery effort. And so we started by listening. We talked with our nonprofit partners that were in communities and asked them what they needed. And they said they needed flexible capital that could enable them to pivot to meet whatever the local community's needs were. And so our CEO, Charlie Scharf, decided to donate all of the gross processing fees that Wells Fargo earned from the government for administering the Paycheck Protection Program in 2020. And we created the Open for Business Fund, roughly $420 million that we deployed through flexible grants back into communities to serve small businesses. And if you fast forward then 4 years, now those more than 200 nonprofits and community development financial institutions are telling us they were able to serve over 336,000 small businesses and help create and preserve more than 461,000 jobs in our local communities.
Wow.
What does a flexible grant mean?
So it means that the nonprofits can use the money in the best way that they need to use it. So, for example, they may use it to shore up loan loss reserves so that they can expand their credit box. They may use it to create new products such as no and low cost grants or loans that don't require collateral or loan modification products. So they really could use it very flexibly. And I would say that what we found successful was, in addition to making that capital affordable for small businesses, where we had caps on interest rates of 3%, they paired it with technical assistance. those nonprofits and CDFIs delivered 1.1 million hours of technical assistance, more than half of that in a one-on-one format, to those small businesses, many of whom were having to learn how to pivot from providing in-person services to something virtual. And so it really was instrumental in being able to help these small businesses through the turbulence.
I'm wondering, we're Bloomberg, we care about metrics. We follow the money and how it's doing, even when it comes to, or especially when it comes to philanthropy. If you could, is it fair to call this philanthropy? Is that how you would describe it?
Yes, this was philanthropy.
So,
but go ahead.
Sorry, we only have a little bit of time, and I want to make sure we get to this. I want to know about the metrics when you follow it over the last 4 years, how it's been deployed and how it's helped these businesses. Has it been effective?
It absolutely has been effective. The great thing was, because the nonprofits had this flexible capital and they could shore up their balance sheets, they were able to leverage our funding to attract other public and private investment to the tune of $2.1 billion. And the other great thing is we saw from the data that the most in need small businesses were able to stay open. So 79% of the small business owners identified as racially or ethnically diverse, 72% identified as low and moderate income, and 53% were women-owned small businesses.
One of the things I wanted to ask you, and like a lot of financial institutions or a lot of companies, they go through cycles and they have their ups and downs, and certainly Wells Fargo's has been well documented over the past years and prior to Charlie Scharf taking over. But one of the things he said is that he wanted to, clean up the bank's many messes. Having said that, what have you guys learned as an institution? How have you evolved in terms of reaching out to those who need to be banked and are underbanked?
Well, I think the Open for Business Fund is a perfect example of how we are investing in the entire ecosystem. So when we think about different small businesses, it's important to meet them where they are. And some may need a microloan, some may need a loan from a community development financial institution or CDFI. Others may be ready to engage with a more traditional bank. But our investment spans all of those dimensions so that we can best meet small businesses where they are.
How do you make sure you reach enough? What's the metrics for measuring that?
Well, we actually exceeded our expectations in going into this significantly. So we knew that we wanted it to be national. We wanted to be able to touch small businesses in every state. We knew that we wanted to be able to reach over 150,000 businesses, but we exceeded those expectations in being able to reach over 336,000. So we are definitely looking at ways that philanthropy can be a catalyst for attracting other investment, as well as creating and preserving jobs in the local economy.
Does it make you think about making this an ongoing program rather than a one-off program?
Definitely, we are focused on what's next right now. In fact, round 3 of the Open for Business Fund is still ongoing, and it's about asset ownership. We recognize that as small businesses are really trying to scale to grow, asset acquisition is going to be really important, whether that is commercial property or equipment or technological infrastructure for their businesses. And so that piece is ongoing, and it will continue through mid next year. And then hopefully soon we will have some new news to share about what's next in following the Open for Business Fund.
Well, we look forward to that and checking in with you, because it's certainly programs like this that help out communities and those that, like we say, that are unbanked or underbanked, and always important to have. Darlene, thank you so much. Really appreciate you checking in with us on this Monday. Darlene Goins, Head of Philanthropy and Community Impact over at Wells Fargo, joining us from San Francisco.
Hey, we've got a great guest coming up on the other side. We're going to be joined by J.D. Crouch, CEO of the USO. We're going to talk all about assisting and entertaining troops and their families, what the USO has done and has been doing, and how it's thinking about the future.
I have to say, just going through, you and I were talking about it in the newsroom, just going through his bio, you know, the different positions he has had within the government in terms of national security and defense. We have a lot of questions we want to get to also on that. So looking forward to that. That's coming up on Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. The Dow lower today. S&P, NASDAQ both higher. S&P little change. Stocks did struggle for direction ahead of inflation data. The PPI tomorrow. Consumer price report Wednesday morning. The latest geopolitical developments curbing the appetite for risk. S&P up by half a point. The Dow down 140, down 0.4%. While NASDAQ is up 35, a gain of just about 0.2%. NASDAQ 100 index advanced 0.2%, but the Russell 2000 index of small cap shares down 0.9%. 10-year 3.90%. The 2-year 4.01%. Gold up $40 the ounce, a gain of 1.6%, and West Texas Intermediate crude oil up 3.7%, 79.66 for a barrel of WTI. Sources tell Bloomberg Starbucks is discussing a settlement with Elliott Investment Management that would give the activist investor representation on the board of the coffee shop chain. On a down day for much of the market, we had Starbucks shares advancing by 2.6%. Again, recapping, S&P little changed, up by less than half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. I feel like I want to kind of start with, I'm thinking Bob Hope and some Hollywood celebrity, World War II. My dad and his brothers were there. I mean, you just would have...
Iconic,
and then entertaining the troops who were overseas defending the world and defending democracy. Having said that, we're going to talk a little bit about the USO. We're going to talk a lot about the USO. We want to get to our next guest. And first up, just to set it up, this individual is someone who was a former assistant to the president and deputy national security advisor. That was back in March of 2005 through June of 2007. He served as U.S. ambassador to Romania. He was managing this complex relationship at the time of Romanian military deployments to Iraq and Afghanistan. He also, Tim, served as Assistant Secretary of Defense for International Security Policy from 2001 to 2003.
Okay, you go back further in his bio, and there's even more. 1990 to 1992, he was the Principal Deputy Assistant Secretary of Defense for International Security Policy. And then, Carol, from 1984 to 1986, he worked for the Assistant Director for Strategic Programs in the U.S. Arms Control and Disarmament Agency, was an advisor to the U.S. delegation on nuclear and space arms talks with the former Soviet Union.
And, he co-founded a tech company. We could go on and on and on, but what we really want to do is talk to our next guest about so much. With us is J.D. Crouch, President and Chief Executive Officer of the USO, or United Service Organizations, joining us from Arlington, Virginia. J.D., very nice to have you here with us. We do kind of have a million questions and are already saying we want to talk to you for an hour. Having said that, how are you? And tell us about the USO, because I do think about Bob Hope and Hollywood stars. I remember watching it with my dad growing up. Not watching, obviously, the entertaining during World War II, but Bob Hope a lot, and who would reference things he did during the war. But tell us about the USO in 2024.
Sure. Well, first of all, I'm delighted to be here. Thank you so much, and thanks for the nice words. It's an honor to be able to have this position and serve what I do. The USO today is, in many ways, it's a modernized version, right, of what, and a very relevant version of what happened in 1941. We still have entertainment connections. It's not Bob Hope today, but it's Scarlett Johansson, or it's Chris Evans, or it's people like that who go out and talk to the troops, spend time with the troops. And the purpose is really the same. It's to really give them a taste of home and make sure that they understand that people back home are supporting them and are thinking about them. But we also do it in a million other ways, not just entertainers. We have 275 locations all around the world. There's, just as an example, there's over 10,000 American troops in Eastern Europe right now as a result of the situation in Ukraine. And the USO is there with them, providing support through centers that we've built on military bases and all kinds of other programs like care packages and things like that. So the USO is a multifaceted set of programs that's all designed to make sure that our service members understand the gratitude of the American people.
Can you remind everyone about the structure of the organization, where the funding comes from? Because it's a nonprofit charitable corporation that is chartered by Congress. Where does the money come from?
Yeah, well, the money largely comes from the American people. We have, donations that are as small as, $5 or less from people who've been supporting. I got a letter from a little lady who met her husband at a USO dance in 1944, and she sent me a quarter that was taped to the letter. Okay.
Wow.
All the way up to big corporations and companies that we have strategic partnerships with. I know you've got a lot of businesses that are watching this. We have got some great strategic partners with fantastic brands that go back, Coke back to 1941, the NFL, Kroger, and lots of others, the Boeing Company, Lockheed Martin, people like that, companies like that, that really are leaning in on supporting the troops. So there's all kinds of ways to help support what we're doing at uso.org.
What about when, individuals come home? I always think about the support once they come back. How do you guys kind of continue the support there?
Yeah, well, when they are overseas, we're actually back home supporting their families. I mentioned the Eastern European deployments. Those are unaccompanied tours. They're not going with family members. So we're back home supporting them around the bases. But when they do return, if obviously we're usually there with some kind of a welcome home for them. We had a great welcome home for the aircraft carriers that have just deployed to the Middle East that came home to Norfolk. But beyond that, as they're looking to transition out of the military, the USO has a broad range of services that help them smooth that transition so that they can get a good job, get the educational benefits that they deserve, and integrate into their community. So we really are there from the time they enter the service and raise their right hand all the way to the time that they transition out.
JD, what I always think about with an organization like this is folks who might be listening to this conversation right now, or just Americans in general, what would surprise them about, I think we just, forgive me, but I think take for granted that there's going to be people doing military service and protecting our nation, protecting, our allies. But what would they be surprised about? Like what you guys see on a regular basis, maybe some of the folks that help you, whether it's going to entertain the troops, what would they be surprised that they might find, or what that you guys find on a regular basis?
Yeah, well, the first thing I would say is, I think there's tremendous, in some cases, sympathy or certainly pride in our military among most Americans. But that's different than really understanding what it's like to wear the uniform. And so part of this, part of the thing that I think when they do get an opportunity to see either what we do or what they do, they're amazed by a lot of things. One is they're just amazed at how, really how American people are that are serving. That is to say, they're like them. We tend sometimes to put our military on either on a pedestal, or some people might tear them down, but or they might feel like they're victims or something. But that's not the way they see themselves. They see themselves as just patriotic Americans who are doing their job for the country. And I think a lot of Americans would be surprised at that. I mean, we tend to get what we get from the movies and things like that. So that's certainly one thing. And in terms of what the USO does, I think maybe people would be surprised at how much we're supporting families. This force is very different than the World War II force. 60% of them are married, and over half of them have children. And so it's a very different type of force. And consequently, supporting their families back home, I think, is a critical part to getting future generations of Americans to raise their hand and say they want to serve.
It's also interesting the way that technology has changed deployment and keeping in touch with family. If you think about it from the perspective of, waiting months to get letters back in World War II or even Vietnam, to getting emails post war on, or during the War on Terror, and now troops abroad being able to maybe do Skype or FaceTime with their families. How do you think about the ways that families are able to keep in touch while folks are deployed?
Well, as you know, this is the in touch generation. I mean, most of the rank and file, as we say, enlisted are actually Gen Z now.
Wow.
And obviously Gen Z and millennial. And consequently, they're used to being in touch. So what's the most requested service at USO centers everywhere?
Internet.
Wi-Fi.
Yeah.
Absolutely.
I knew it. Yeah.
It brings them in. It's what keeps them connected. One of our really exciting programs is our gaming program. And, gaming used to be kind of isolating, but now it's not. It can be a family activity. It can be a friend's activity. And so we host gaming competitions and things like that. And a lot of times people just want to come into our center, relax, game with their friends who might be next door, or they might be 4,000 miles away.
Really fascinating. I'm just kind of looking through your website too, like even the virtual programming that you guys do. I mean, I think at the same time you must be thinking about kind of these service members, what they might do next. And we just have about 30 seconds, and then we're going to come back and talk more.
Great.
All right, sit tight. JD Crouch, we're going to come back in just a moment. He's President and Chief Executive Officer at the USO, joining us from Arlington, Virginia. But really important, and like I said, it's an organization that's been around for a long time, but, you know, I think we just assume that these things are happening, but there's a lot of work that goes involved.
Also notable to think about the funding and what pays for this. Individual contributions, like you explained, corporations ponying up and donating money, and products as well.
Yeah, exactly. So we're going to dig a little bit more into it and kind of what's next and the future. And maybe I'd love to just tap into a little bit of his background in terms of what's going on around the globe. Right now, though, let's get back to world and national news. Speaking of things going on around the globe and across the country, here's Amy Morris.
All right, thank you, Carol. Israel says it is currently at its highest state of alert. The U.S. is beefing up its posture in the Middle East, warning that an Iran-backed attack on Israel could come as soon as this week. White House National Security Spokesman John Kirby.
We've got significant force capabilities in the region. We've changed some of that posture in just the last few days. The president is confident that we have the capability available to us to help defend Israel should it come to that.
Kirby says it's hard to say what a retaliatory strike by Iran would look like. Gaza ceasefire talks are planned for later this week, and ahead of those talks, the U.S. has shored up naval and air forces in the Middle East to help Israel fend off any major attack from Iran or Lebanon's Hezbollah. Secretary of Defense Lloyd Austin ordered the USS Abraham Lincoln Carrier Group, equipped with F-35C fighters, to speed up its arrival to the region and dispatch the guided missile submarine USS Georgia. The U.S. is also warning Iran of consequences if they plan to arm Russia. The Pentagon says it is aware of reports that Tehran plans to provide Moscow with hundreds of ballistic missiles.
We've been warning of the deepening security partnership between Russia and Iran since the onset of Russia's full-scale invasion of Ukraine. This partnership threatens European security and illustrates how Iran's destabilizing influence reaches beyond the Middle East and around the world.
State Department Deputy Spokesman Vendit Patel. An earthquake with a magnitude of 4.4 has struck Los Angeles. The U.S. Geological Survey says it was centered near the city's Highland Park neighborhood, about 7.5 miles below the surface. People reported feeling it strongly. One medical building shook, and residents say that some glasses and dishes rattled in many of their homes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. A little change for the U.S. stock market today. Back to work Monday and just a half-point gain in the S&P. Stocks struggled for direction ahead of inflation data, the PPI report tomorrow, CPI on Wednesday, and the latest geopolitical developments certainly curbed the appetite for risk. Again, S&P 500 index today little changed, up by less than half a point. The Dow slumped 140 points, down 0.4%, while NASDAQ was up 35, a gain of 0.2%. 10-year at 3.90%, the 2-year 4.01%. Spot gold up 1.7%, 24.71 the ounce, while West Texas Intermediate crude was up 3.6%, 79.61 for a barrel of WTI. Sherry Paul is Senior Portfolio Manager at Morgan Stanley Private Wealth Management. She says the 3% swoon for the S&P 500 index 1 week ago today was definitely an opportunity.
What we're seeing is a market of investors and speculators that are overreacting to economic weakness and ignoring economic strength in the Main Street economy because they're not seeing it. They're not seeing the mom and pop hiring that we see in the ADP data. They're not seeing, and maybe not looking at financial conditions when it comes to small business loans. They're looking at the bond market.
Neela Richardson of ADP talking about the economic backdrop. Again, recapping, S&P 500 index little change today with a gain of just about half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to J.D. Crouch. He's President and Chief Executive Officer at the USO, or United Service Organization, still with us from Arlington, Virginia. Hey, J.D., one thing we wanted to ask you, you've been CEO for about a decade. How has the organization changed, and where do you think the USO needs to go in the next 10 years?
Sure. Well, we have spent a lot of time on it's something you wouldn't see, but, from an organizational standpoint, consolidating the organization and bringing it together. When I first joined, we were 19 independent 501c3s. We're now one. And this has really helped us to be able to not only raise more funds, but also to move those resources where we need them, because the troops are moving in different places. Who would have thought 2 years ago we would have had 5 or 6 centers in Eastern Europe, for example? And so where it's going is always where they're going. And I'll give you an example of the innovation that we're just now, I think your earlier clip talked about the Abraham Lincolns sailing to the Middle East. The USO is now putting USO centers on aircraft carriers.
Wow.
Very cool program. And again, this is 5,000 people on a contained area with nothing to do except their jobs. And so this is a little R&R center buried right in the middle of the aircraft carrier. We'll be on 9 carriers by the end of the year, and then hope to get on the other ones in 2025. So it's those kinds of innovations that we will always seek to make sure that we are with our service members and their families wherever they go.
You mentioned Eastern Europe, and you have a lot of experience in Eastern Europe. As we mentioned before, you were U.S. Ambassador to Romania 2004 to 2005. You also were an advisor to the U.S. delegation on nuclear and space arms talks with the former Soviet Union back in the 1980s, I believe. So I want to talk a little bit about what's happening in Ukraine and in Eastern Europe right now, and the different philosophies that are existing in the modern political environment, because it does seem like there's increasingly a large number of folks here in the U.S. who are thinking about the United States as taking a more isolationist approach. And we're certainly seeing that in Congress each time a funding bill comes up to support Ukraine and President Zelensky. How do you think about the U.S.'s role around the world right now?
Yeah, well, obviously the USO doesn't take positions, right, on wars or political positions on things like that. But I think, personally, we do need to recognize that it's a pretty dangerous world. We've got the rise of China to become a global power. We have a revanchist Russia, which is really seeking to kind of recreate, and those are their words, not mine, recreate the former Soviet lands. And then we have a revolutionary Iran in the Middle East. And not only are all these things happening at the same time, but they're actually aligned. They're working together. And so that presents the United States and its allies with a lot of challenges. And it has an impact on our business because it means the operational tempo of our military has gone up dramatically. And you see it in the Middle East, you see it in Eastern Europe, and not so much, but it is also there in the Far East. And it means that the demand for our services is going up dramatically as a result of that operational tempo. So it is a very dangerous world out there, and it's one that I think we ignore at our own peril.
Do you feel like it's more dangerous than some of the times where you were serving, whether it was George H.W. Bush or different, or George W. Bush, excuse me, other times where you were helping out administrations? Does it feel more dangerous?
Every generation has its challenge, Carol. You know, I mean, it is what it is. And obviously during 2001, that was 9/11 and the terrorist attacks and things like that. But this does feel like a return to kind of great power conflict. And that has obviously the risk of escalation and things like that. So yes, I guess I would generally say it does feel a little bit more dangerous, almost a little bit maybe like it felt back in the late 70s and early 80s.
Go ahead, Carol.
Well, and I wonder, you know, the U.S. and its traditional allies in Europe, do you think that comes undone, or do you think that survives?
Well, I think we have very strong alliance relationships, and you know, not some of the obviously the older traditional ones with the United Kingdom, as well as the other founding NATO members. But also, I will say just a shout out to the Poles and the Romanians who not only supported the United States after 9/11, not only sent troops to Iraq and Afghanistan, but who are actually investing in their defense in a serious way, and consequently they're arm in arm with us as we're in Eastern Europe right now. We're not alone there.
Well, it's interesting to hear you say this, just because we're in this political environment right now where I think a lot of folks are saying, you know, it's okay for us to ignore what's going on in other parts of the world. The alliances of old aren't necessarily the alliances that we want to continue with. We hear criticism of some of these alliances from one presidential candidate in particular. What would you say to Americans who would say that they're critical of some of these alliances that have been traditional post-World War II?
Yeah. You know, I actually think if you go back and you look at the history of NATO, for example, even going back into the 1950s, there have been president after president after president who've said they need to do more. You know, they need to step up and invest more in their defense. And so there's in a way, I always say it's a little bit like deja vu all over again, you know. And yes, these things wax and wane a little bit, but in particular, when the demand on American resources is higher, it is not wrong, I think, for Americans to expect that our allies do more. Sometimes we don't hear about what they're doing. We don't realize how much they're doing. And some of them, frankly, can do a lot more. So I think it's a balance, but that doesn't mean we shouldn't have allies. Mm-hmm. You know, in other words, we need to have allies, I think, and support our way of life. I mean, I don't think we're doing it for them or just for them. We're doing it because it's something that's important for us.
Hey, JD, just to wrap up, when someone mentions the USO, what do you want people to think of first?
I want them to think about a service member who is out somewhere on the frontiers of freedom, who's alone at Christmas, who is separated from their wives or their families. And I want them to realize that there's almost nothing like that in the world, and that they need our continual support. And they need to know that Americans, no matter what their views are on the political issues of the day, they didn't make the decision to get sent to Eastern Europe or to the Middle East or someplace like that. Somebody else made that decision. But that means Americans still have an obligation to show them our gratitude and show them our support. And of course, I think the best way to do that is supporting the USO. But there are other ways too. But that's what I want them to think when they think of the USO.
We so appreciate your time. Good luck with everything. JD Crouch, President and Chief Executive Officer of the USO, United Service Organizations, joining us from Arlington, Virginia. You're listening and watching Bloomberg Business Week, and this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Johnson & Johnson has cleared a key hurdle for advancing a $6.5 billion plan to resolve thousands of lawsuits by people who say its baby powder gave them cancer. Those sources say more than 75% of the group signed off on J&J's proposal through secret balloting that ended in late July. J&J today down 0.5%. Sources tell Bloomberg Starbucks is discussing a settlement with Elliott Investment Management that would give the activist investor representation on the board of the coffee shop chain. Starbucks shares gained today by 2.6%. Barrick Gold shares surged 9.1% today after reporting second quarter adjusted EPS that beat analyst estimates. Mark Bristow is the president and CEO of Barrick Gold.
Good set of results, nice margins. We were able to really deliver the margin from the rising gold price into the bottom line, which is good. Margins on gold were up a lot, even more so for copper. Prices were flat, and those prices will start coming down now on the back end of this year as we address some of our investments in sustainable production.
Mark Bristow of Barrick Gold. B. Riley Financial has suspended its dividend and warned of new losses as the firm wrote down a portion of its stake in Franchise Group, a troubled U.S. retail business. It comes as L.A.-based B. Riley faces a widening U.S. investigation into whether it gave investors an accurate picture of its financial health. The stock today down by 52%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check of the latest world and national news. We got Amy Morris in the 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Israel says it's at its highest state of alert. President Biden spoke by phone today with European allies about the increasing tensions between Israel and Iran. The world is watching to see if Iran retaliates for the killing of a Hamas leader. National Security Council spokesman John Kirby says it is hard to know what Iran's retaliation is going to look like.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week.
The U.S. has also beefed up military presence in the region. Secretary of Defense Lloyd Austin ordering the USS Abraham Lincoln Carrier Group to speed up its arrival in that region, and also dispatched the guided missile submarine USS Georgia. The U.S. is also warning Iran of consequences if Iran plans to arm Russia. The Pentagon says it is aware now of reports that Tehran plans to provide Moscow with hundreds of ballistic missiles.
We are deeply concerned by reports that Iran is planning to deliver hundreds of ballistic missiles to Russia, and we continue to communicate with our European partners and allies regarding potential measures we may take.
State Department Deputy Spokesman Vinay Patel. Columbia University is ramping up campus security now ahead of this fall semester. Commuters say they notice a difference for sure.
It definitely changed my commute route because the plan was to just cut straight through campus to go through the hospital. Now I can't do that.
Last week, we were able to walk through. You know, all we had to do was tell them who our contractor was and where we were going. But now it's a different story.
Columbia's security level had been as low as green, but they are getting ramped up because of potential protests on campus, just like last year. So now it's at level orange. A 4.4 magnitude earthquake has struck the Los Angeles area. People reported feeling it across LA. One medical building shook, and residents say that glasses and dishes rattled in their homes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy Morris, thank you so much. You know, you on our planning call were saying, we got to get back to some Russia-Ukraine stuff. And I'm looking at the most read story in the Bloomberg in the past 8 hours. Vladimir Putin abruptly interrupted an acting regional governor who said Ukraine's military had taken control of 28 towns and villages in Russia's Kursk border region, prompting a sixth of its population to flee.
Yeah, we're talking about Alexei Smirnov, who said Ukrainian forces had penetrated at least 12 kilometers into the region, 7.5 miles, and controlled a border area 40 kilometers wide before Putin cut him off at a televised meeting with defense officials on Monday, saying